Last quarter, it gapped down to 206. Went all the way down to 192 over the next few days. Bounced up, failed, bounced up, failed, failed. And today, we were gapping down again on seemingly it wasn't that bad, the number, considering how much it came off last quarter already, considering how much it's off the high, which is here. This is an interesting setup for potential bounce. I'm going to go all the way back to the year 15 months ago to when it first got up here. So it's maybe bounced a little bit already in the pre-market. Let's take a look. We're on the conference call right now. Okay, so touch 94 doesn't really bounce much, but a little bit. Obviously, the conference call wasn't going well. So initial reaction was here. The numbers weren't really bad, so this was kind of expected. In the conference call, obviously they're saying stuff that some people don't like. It's been sellers since. Volume came in into the 94 level. We have the sheet, so 93, 94. So we got to go back a couple weeks ago. And you had definitely had people buying incoming earnings, right? They bought it here at 94 3 days in a row. Popped up to 202. Some people in from higher prices here above 98, 7 days, 8 days or so. I would think that even if it flushed through this low here, went all the way to 92, was that the post low from last quarter? Yeah, here. We get some sort of bounce back, especially over the next week or so, back up to 198 to 200. So this is our first resistance area. It's going to be here and here. It's not as clear as a play as was that one yesterday, Hasbro. The numbers were good, yet it level dropped out, and then it rallied up $4 or $5 right away. But if it flushes through 94, not by much, and gets back above 94, and then takes that 94.50, you're playing it for something like this. I probably would take some off at 96 and see what happens. And then if it really gets crushed down to the 92 area, put some in the long-term account and go from there. Looks like they're still on the conference call. All right, Lilly. Numbers were good in Lilly. They're spinning off their pet healthcare business, which I think will probably be a big deal in the coming months. It's just become such a huge business in the U.S. It's 100 million pets or something. It's an expensive stock. It's up a lot. Probably the only thing potentially hurt it. So we go back to, I guess it's actually been consolidating for a few years between 90 and 75. So that's been quite a bit of time. And this was the biotech bubble top, is right here. Biotech, I think, came up like 30-40% or something like that. A few of them, a few of the strongest have come back to the 2015 highs. Some of them have even maybe taken them out. So this is definitely one of the stronger ones compared to like a Guild or something. See, Guild isn't anywhere near the high from 2015 compared to like an Amgen. So Amgen's more similar to Lilly right at the highs. And when that sector topped out, the leaders have gotten back up to highs for the strongest stocks. So it's gapping this morning, not quite to the all-time high from 2015, but close. I think the main thing that's driving the breakout would be the reason I put that in the notes is the IPO spin-off of the animal healthcare business. The numbers, they were fine. They beat. It was a small raise. It's already come off a couple of dollars. What do we have for support? So we're going to have support till down here. 92.60 resistance. I guess that was the prior high. So this is how I'm looking at it coming in. Is this range right here. Prior high down to 90. I'm not going to play it in either direction. I think if it closes above 92 today, I'll probably be looking for it to make new all-time highs this week. Next one's Hog. The Hog's a beaten down stock. The numbers were good. Here's the daily. I feel like they released them maybe by accident during the day at the end of the day yesterday. I created something there. So this one topped out in 2014. This was a pretty good rally it had back here in about a year and a half ago. From 40 all the way back up to 62. I'm not expecting Trump to tweet about them today, but remember, you got a little bit of a spat with them a month or two ago. And they said they were going to move production overseas. This is probably this move here. I noticed like initial reaction down, Trump made some nasty tweets, and then slowly it got brought back up. Now they come all the way back down and tested 41 from his earnings. So really the question is 42. So this is for support. This would be support. If they flush this one at the open, does it get above 43? There's a test of recent resistance here. Best case scenario is all the way back up here. So initial reaction was positive. We don't really have enough volume to make much calls here, but buying some at the 42.50 a little bit and kind of seeing how it behaves. Going to come into here, you can flush a little through, get back above 43, then I start to be real bullish on it. The other bullish scenario is just to go straight up on the open, comes through, gets above 44, shallow pullbacks holding above 44, and we look all the way back here where it topped out in June 22nd, 45 and a half. So it came from 45 and a half down to 40 and a half in 2.5 trading days. So Canada reached that move on things they're saying in the conference call today.
Was looking for this on a day two continuation to the downside off of basically selling off the earnings report yesterday. So I did end up taking a 1 minute back through open and ended up getting stopped out of that on the first move up. Then once we reclaimed, I wanted to give it a second shot, and I actually did hit the second back through open right around 293. Earnings day low was 291, and was looking for momentum to kind of speed up around there. However, once we kind of got into that level and bidders ultimately started to step back up and we weren't really able to have the momentum to break earnings day low, I did end up kind of trailing the position as we kind of got the pop up there. And then from here, I just wanted to work move to move at that point. So I did end up shorting back into 292 as we got around like the 940, 942 area. And then I did end up adding into the position at 290, giving the average price to 291. And then again, once we ended up making new lows and really not really able to sustain lower prices and bidders just kind of stepping the price back up, I did end up trailing the position again up to 290 as well. For me, I think right now what I'm realizing with this is just that the momentum type of trades on the day two after kind of a range expansion day aren't really the ideal prices to be adding into positions. It's more of actually getting more of the core size towards the top to begin, or towards the higher prices to begin with if you're looking for the downside trade. To me, I think that's kind of like we kind of saw with Walmart as well. I think to me, it just, there really wasn't a lift, but necessarily, or it wasn't necessarily a lift, but you were able to kind of get retracements to like recent sell areas where sellers were just ultimately kind of selling things back off. And I think that's kind of the mindset that I should have had with HD today, is instead of trying to get the lower prices adding into the position, really just looking for those kind of sell-off areas to kind of get the higher size to begin with. Yeah.
So let's go through this very quickly. What's the catalyst?
Catalyst would be selling the earnings report. It was a day one catalyst. And then
that's not, I mean, the catalyst yesterday was was earnings, right?
Yeah.
So what's the catalyst today? Same thing?
Yeah, basically. It's just selling off the report yesterday.
Okay. So catalyst was there. So the setup, I think, is what?
Day two continuation to the downside.
Yep. And I think you could also even say day two continuation on a failed breakout, right? Or on a gap fail. Because didn't this gap up and fail yesterday?
Yes, it did completely.
So, it's day two on a gap fail, right?
Yes.
Okay. What are the trades that are in your playbook that you can take on a day two off of a gap fail?
For me, it's looking for a first move up into a prior resistance. Or
okay, that's fine. What can you do after 10 o'clock when you don't get the first move up into prior resistance?
Look for the trend trades.
Okay. What's one way that a trend trade could show up?
For instance, to me, kind of right here, how we were able to kind of push up above VWAP and ultimately fail and kind of consolidate below VWAP.
Zoom out to a higher time frame. Go to yesterday's price action as well. Okay. So not on the daily, if you can go to just the yesterday's price action and today's price action. Okay. So we tried to rally, right after 10 o'clock, right?
Yep.
If you only look at the price action there, what are we actually doing when we can't rally up?
Just pulling back.
Just making a range, right?
Yep.
So could you potentially add a day two range trade? Yes. Where you're actually shorting into that up move versus waiting for the consolidation down, because you're betting that that's a range trade.
Gotcha. Absolutely. Yes, absolutely. I think for sure going into it, seeing it there too, a good short would have been into like the 293, potentially risking that up to like high of day.
So that's something that, you want to, everybody's saying, I want the first move up. I want the first move up. I want the first move up. I get it. That's the easiest trade, right? That's the best trade that you can ask for. What we got in target today was perfect. It's exactly what you want to see, right? Everybody's saying that in Walmart today. We didn't get that. Okay, that's fine. What other trades can you make? Like what other trade? You can't be the type of trader that only has one trade in his playbook. And if you don't get that, you're not doing anything, or you're taking subpar trades. You want to have your A plus setup is a move up into 300 or 298 or wherever. Your B setup is this after 10 o'clock consolidation at the lows in a week tape, right? Because this is different than if Walmart would have just been bought up on the open, if Target would have been just bought up on the open, never went lower. Those are different trades. But you want to build your playbook out so that you have different trades within each setup that you have. So a setup day two does not mean only one trade. If you're the type of trader that likes to buy stuff, a setup day two, maybe a hard first move down into a support area, you're buying and you're getting long. This is perfectly fine. But you want to know what your trades are in each setup. And you want to have multiple trades in each setup.
Absolutely. I think that's the one thing is right now, currently the playbook does not have more of a day two range trade. It's just a continuation. And I think that's zooming out here and seeing it, it does clearly look like a day two range trade for a playbook setup. And I think that's the thing.
Yeah. I mean, so let's talk through the risk allocation to this, right? How much risk could you allocate to this setup versus the ideal situation?
The ideal situation I probably would have said is like right now, 20 to 25%. Versus a day two range, not necessarily being as highly convicted, 10 to 15%.
So there you go. But who knows? Over time, you may really develop that, and it might be you're risking as much or more if you get this setup, or this trade. Sorry, this trade in this setup. So
of course, and I think zooming out here, it clearly to me it looks like that 293 kind of retest, risking up to high of day is a clear kind of short for a day two range trade. Absolutely.
Really
And then,
interesting things that we get to study and we get to get better at, and we get to learn from. And for us on the desk, we're just learning this as well. Like we've had to learn a lot over the last year and a half because markets are getting tougher. And even as markets are getting tougher, we have traders that are putting up their best P&L days, weeks, months, ever. So what do? We learn from them. And the things that people are doing exceptionally well on our desk, at least, the people that are doing really, really well are the ones that are building out their playbook so that in a setup, they're going to have multiple ways to attack versus just that one. Because imagine if you would have been short from 294, half your size, and then had below 292 on that range break. It's 286 now, and you've risked 10% of your daily stop, but you don't have a reason to cover. Like, what's your reason to sell in this trade? Like a full ATR down, maybe?
I would say either a full ATR down or honestly a change of character on the tape with bidders ultimately really kind of stepping up.
Yeah.
Besides that, it's past the time of momentum, and it's just kind of it's a trend trade at this point. I think anything midday after 10:30 or 11 is ultimately a trend trade, and if you were able to kind of build into it on a day two range playbook up into that 293, 294 area, and then adding into it like you mentioned, I think the only two reasons to sell would be those for a trend trade would be honestly if you ultimately see a change of character in the tape or your target profit your profit target gets hit.
Oh, cool. So that you get to playbook this as this is an added level within my whatever,
Yep.
So.
And I know that's like the one thing I know, obviously momentum has always been kind of the stuff that's I've gravitated towards, where range trades have not always been in the like in the tool belt necessarily. So it's definitely kind of definitely a good way to kind of look at things now. And it's easier to kind of see things just kind of zooming out a little bit and just being able to add it to that.
Cool.
So market's gapping down a lot with the Apple terrible warning. But it's pretty clear that since we bottomed after about 2 weeks of selling, that buyers have been very happy to step up above 245, mainly above 247. Actually, you can see pretty clearly in the daily. So this was too steep. It was unsustainable. We bounced above it. Now what we're looking to see is if we can break back inside of this 260 to 250 meltdown. Kind of was thinking 253 to 254 would be the spot if we broke through here. The chances of that happening, I believe, are reduced because of the Apple warning, although right now the market's trying to show signs that it can break back above this, hold above 248. But on the game plan notes, you can see that this is going to be big in a weak market. When the market bounces and then spends a few days being accumulated at higher prices, the time with which it needs to break to the upside expires usually after a few days. So I'm not going to say today is the last time, but certainly by tomorrow, if we don't take out the high from the last few days, the chances of us rolling over and testing 240 to 242 are pretty high. Of course, obviously, I'm sure many people think, we could just go right through there, put in a new low, all that. We're just not seeing signs of that yet. It's just the market's been holding up really well in these overnight gap downs. Right at the end of the day, we closed 250. The Apple warning came out. We rolled over with Apple. I didn't put that on the sheet, but we will talk about it. We'll definitely talk about Apple. The main thing is to not overtrade it. So here's kind of the way I'm looking at it today. I'm short from above 250. I'm hedged from above 250. I still have some 250 calls left. I bought a couple, when we were down in the 230s that expire tomorrow. And covered some in the after hours down here. We shorted some up here at 248. And I want to see, we can't hold, let's say, we can't hold in this area up here on the open in the first 15, 20 minutes. We start to roll, we'll be focused on staying short for a test of this. Qs are going to be getting kibosh because of the Apple. So Qs closed at 155. Apple News came out, they went to 152. Ouch. We are back above 152 now. And this seems like a spot potentially where the Qs would be short. We'll check in with Apple to see where that is. But 152.5 to 153 right here. This would be the spot. It'll be a testament to the strength of technology overall if this actually gets taken out and we start to hold above it again. But right now, my first thought would be we would fail into this. IWM should be less impacted by this news. This is pretty good. Just a very clear uptrend off the lows. So yeah, I would say as long as IWM's above one, that's a ways to go down there. Let's see. Just from a bigger picture perspective, I'm looking at it like this from a couple of years ago to pull back into 132.60s. I would say as long as we're above this right here, I'd be continuing to look for it to eventually hit that 136 target. Got really close yesterday. They get out above 135, failed. They double top up there at 135. So if it gets up to like into the 135 area today, I'd watch it really closely. And by the way, like when things tend to hit the targets, the longer term targets I put in, I'm usually conservative. So it actually hits 136 like quickly in the first few hours. You want to mitigate best case scenario would be something like that. I'm short the 140 calls, still long the calls we bought down here 126. Long some 130 puts. So really been able to capture this whole move, trying to capture a few more dollars, a couple more dollars. All right, so BNY is buying CLG. They did a cash and a stock offer. Not spending too much time how these merger arb situations work. This does seem like one that actually could be tradable. They're doing $50 cash plus one share of BMY for every share of Celgene. There's a lot of Celgene shares outstanding, 700 million. The equivalent deal price is basically at $50 cash to the current price of BMY. That's 98. If we look at where Celgene is trading right now, it's at 89, so it's a $9 spread. That basically means if you get long Celgene today and you get short BMY, when the deal closes, you'll capture that $9 spread. Plus, there's a kicker. If certain drugs get approved by the FDA over the next couple of years, there's another $9 of upside. If I was running a risk arb fund, this would be a deal that I would actually look to put on that spread. And so what's important to recognize is the stock has already bounced a lot. Meaning, like, the deal supposedly, the analysts are coming out, they really like the deal. They think it's going to be accretive, which means EPS will go up for BMY. So you can see it went from 44 to 46, then went to 48 here. When we got to 48, it pulled back about 80 cents, now get to 48 again. So the buyers are technically in control. When the market opens, if merger arb funds start to put on this spread, meaning get short BMY and long Celgene, you will see a massive volume uptick and pretty nice size red bar. And once that happens, as long as they're continuing to put that deal on, BMY will go down, even if the deal is liked overall by the market until the merger arb guys are done, which could last a couple of days. And so that's kind of the trade. So I just want you to be aware of that, even if it looks like strong right on the open. As soon as you see like a strong red bar, that could be the sign of the funds putting on the deal. I didn't see anything about governmental risk, so it seems like this is. Well, let's let the price action dictate. By 10 o'clock, if it's looking like it's in a downtrend BMY, there's a good chance it could just continue all the way back down to the pre-market lows. And then Apple. So I was not on the desk when they first came out of the halt at 150. Absolutely, the warning was awful. They lowered guidance by an amount that seemed to indicate that China sales collapsed. Because they lowered the guidance 8%, and so let's say China's 20% of their sales, double that, it's like 16% drop now in China. So at a minimum, it was a short down to the low from last week. Obviously, people were thinking the same thing, so they slammed it right through that. It bounced back up to that level, and people just kept on shorting it, driving it down another $3. And so now we kind of have a starting range for today. So I would say this news basically is shaken off. If it closes above this fill band right here, to me that says the news is being shaken off. On the downside, 145, basically 145, 146 and a half, 147. Those are the two spots I look at to see if it gets sold. I don't know how much more downside there is below 142, 142 and a half. I suppose maybe I could try to push closer to 140. But there's going to be some bottom fishers on this today, absolutely. Here's what it looks like from a longer term perspective. And so obviously some of that China news was already priced in. That's why the stock sold off from 230 down to 150. Based on what I was seeing, people who are pretty smart that I've talked to, that this was not the level of this warning was not anticipated. And so not for today, but from a bigger picture perspective, maybe it does work its way back into the 130s. If the market overall melts down through last week's low, I guess it could come all the way back down to where it started at the beginning of 2017, into the high 120s, 130. From a long-term perspective, you're looking to get involved in Apple over the next couple of years. It's probably a buy right now and then into here, with upside over the next few years back up to 200. Big dividend. Second is technical plays. So Tesla yesterday, they did miss on deliveries of Model 3s. It got slammed on the open. It did bounce $15. I would say I wouldn't be more constructive on the stock, bigger picture, until it started to have some closes above 310. So it got above 310 in the afternoon. They slammed into the close. It's gapping down this morning. So, I started to see it kind of holding up in this area here for a couple of days and then broke to the upside. I believe it's going to work its way higher. But right now, other than buying it, I actually tried on right in the open. I think I bought 301 and a half or something like that. I got stopped out. Not quite at the low, but pretty close. give it a shot on the flush through this low right here. First move is up today and it actually gets above this, and then kind of starts holding in this area. Then would be interesting to me. And then of course if it has this and closes below 300, that would be pretty bad. Watt. So Watt's on the sheet because it turned out to not be a one-day wonder. It overshot to the upside. Obviously, people were looking at it on this day above 6. Went up to 9. They kiboshed it right back down where it started. Actually went below 6. And then put in the low on, I guess this was Monday. Went all the way down to pretty much erased almost this entire move. And then yesterday got back above 6, where I'm sure people started to notice it above 6 again. And so it looks, a lot of times if the news is real in these situations, you'll find out like a week or two later, meaning first day pop, it gets crushed, and people are like, that news is pretty big. They are going to have a product coming to market. And so people will start to look for it to like work its way back up to this. So it's already run quite a bit. Already tagged $7 yesterday, but it's definitely worth keeping an eye on, especially if it's holding above $6. USO had a big pop yesterday. I saw a news item that the results of the fracking wells were well above what people had predicted, and we know that oil's been crushed the last couple of months, so we know that it had this big pop the other day, right here, and it was accumulated for 4 days in a row and popped again. So this is starting to look pretty good for oil opening in the bottom. And plus, Trump's been tweeting about it, so he's usually good at top ticking and bottom ticking things. Top ticked the market like 3 times in the last year. So it does look like oil could at least work its way back up to 10.5. It's up 80 cents right now, 47.7, 68 per barrel. You have 980 support. I'd watch here if we get a quick pullback like on the opening for this area here. This is an interesting spot to buy against 980. You can see last night it was a little bit lower. But getting in here and then nibbling and then seeing if it can actually start to hold about $10 and play for the break to the upside. That's that. It's extremely liquid. You can play with basically unlimited size. So this week's buys failed 248 again. We want to watch this really closely. I've been really impressed by how well the market's held up the last few days. Like yesterday's gap down, that was a big gap down into the 245s. We were strong on the open above 248. We held 248 in the pullback here. Then they ripped it to 250, and they bought 249, and they ripped it above 250. This is a pretty vicious pullback at the end of the day through 249, but they ripped it right back up to 250 again at the end. So people are buying at higher prices. Apple is a market leader with terrible news today. If the market does not basically fall apart, this is it's a pretty good sign that we're going to get higher. As I've said, I've been very skeptical that we could get back to 260, but certainly this area right here. So, and obviously I'm prepared to play it. If this fails here and we start to hold below 247, I do want to play a retest of yesterday's pre-market low. As always, be patient and good luck.